An incredible day for Bitcoin. Everybody's really excited at the idea that this thing is going to become way more mainstream by way of exchange traded funds. In other words, you're going to be able to go buy an ETF in Bitcoin. Think about what that will do for the currency. Hello, everyone. Welcome to the Trish Regan Show. I'm Trish, and wow, it was a really big week for the cryptocurrency. And it could be an even bigger week next week when it's believed that they'll actually start trading in ETF vehicles. Right now, the SEC has been pretty hands-off, surprisingly, in some ways, but this vehicle may enable the SEC to kind of get a little bit more in there by way of regulation. That's the thinking anyway, right? So one of the beauties about Bitcoin, but also one of the challenges of Bitcoin is, of course, its lack of regulation. This is why Bitcoin maximalists love it, right? The idea that you can have a quote unquote currency out there that isn't regulated or influenced by any government body is something that's pretty intriguing and pretty exciting for those of us that are really sick of the Federal Reserve and the Federal Reserve's constant interference by way of money printing, bond buying, you name it. I keep saying Jerome Powell's like the new Fred Astaire. He's doing a heck of a tap dance. And it's been working thus far in terms of helping to prop up the market. But what happens if Jerome Powell pulls that away? What happens if the Fed decides to not put so much money into the system? Can the economy really still sustain itself? That's a fair question, one that we're going to find out the answer to as we get closer to the end of the year, because the Fed has indicated that it's going to pull that money away via that tapering of its bond purchase program. So that leads us back to Bitcoin with the thinking that, well, maybe you have more security in something that lays outside the Federal Reserve's influence. It's a fascinating vehicle with a lot of mystery around it, which causes some people to have a little bit of pause and others to say, well, you know, it's okay. This is something that is finite in that there's only so much mining that can happen for Bitcoin. And the other thing that I think excites people is that there's an alternative to currencies. What you do see a lot of is that in very emerging market countries where there's hyperinflation and a lot of money printing and a lot of chaos around the economy, Bitcoin really starts to show its value, cryptos in general, because they're different and they're not governed by the government entity. Anyway, so again, topping 60,000, we'll see how this shakes out in terms of whether or not they get the approval. I have a feeling they actually will, but I mean, a lot of the pricing that we're seeing right now is dependent on the idea that the SEC is going to allow all of that to go through. One of the things that you know I encourage everybody to look at, one of the sponsors of this program actually is Legacy Precious Metals, and I watch gold very carefully. I have for many, many years, because I see it is that vehicle to help iron out a lot of the fluctuations. One of the reasons I think gold went down in Friday's trading is in part the enthusiasm for Bitcoin, because you have a lot of investors that are somewhat similar, right, in that they like gold because it's outside the Federal Reserve's influence. It's not going to be as affected by the money printing. In fact, when there's money printing, gold helps to retain its value, and that helps shield you against inflation. But the same crowd often likes gold and Bitcoin simultaneously, and given the gravitation in the latest week to Bitcoin, you might see gold be under a little bit of pressure. That could happen next week too. A lot of people might say that's a buying opportunity. Look, I like buying things when they're low. I mean, that's the whole idea, right? Buy low, sell high. So take a look at gold. When you do, I want you to call my friends over at Legacy Precious Metals. LegacyPMInvestments.com is their website. You can use my name. Tell them I sent you. I'm going to give you the phone number, 1-866-589-0560. It's there on the screen for you, 1-866-589-0560. Again, gold under pressure, a little bit of pressure on Friday, and you could anticipate that as everybody gets all excited about Bitcoin next week, it may continue to see some of that pressure, in which case I like it more, because to me, that's a chance to get in, not at the $1,800 $1 million-dollar valuation. Anyway, back to Bitcoin. This is something, I want to talk about here. The Bank of England has come out with a warning, and this is pretty interesting in that they think it's going to possibly pose a systemic risk to global markets. The cryptocurrency arena, they say. Now, they've been warning about cryptos for some time, but this latest warning, I think you need to pay attention to, because their concern, according to one of the governors there at the Bank of England, the concern is that you could have a systemic crisis similar to what we saw in 2008 as a result of this very unregulated market. Look, it is the Wild West, for sure. Cryptos are a crazy arena that are not regulated. And that's one of the reasons the Bank of England has repeatedly warned, look, you could lose your shirt in this. But now they're saying it may actually affect the entire system. Like, in other words, it's not just necessarily the specific crypto market. They're saying that there's a $2.3 trillion sort of environment around cryptos. That's a lot of money, 2.3 trillion. I mean, granted that the entire system is more like 250 trillion. So the global financial system theoretically should be able to withstand that, but just keep this in mind. Back in 2008, you had a subprime market, subprime mortgage market of about 1.2 trillion. So if that's 1.2 trillion, now you're talking 2.3 trillion, and it's really unregulated. I mean, subprime was kind of unregulated, but now Bitcoin is really unregulated. Cryptos are really unregulated. Then what might that mean? I think it's a worthwhile thing to think about when you look at the possibility of these sort of black swan events in financial markets. You have to take everything into consideration. And the fear of John Conliffe, he's the bank deputy's governor of financial stability, is that, quote, in that case, one such as a financial crisis that he anticipates with cryptos, the knock-on effects of a price collapse in a relatively small market was amplified, or actually in this particular case, he's referring to 2008 in the mortgage market. In that case, it was amplified, it was reverberated through an unresilient financial system, causing huge and persistent economic damage. And his concern is that this could happen again, albeit this time thanks to cryptos. It's certainly something to consider. Look, I'm once again a big believer in diversified portfolios, making sure that you have protection against bad things coming. Sometimes you get some indication of it by watching the 10-year Treasury yield, and it's the reason why I keep a very, very close eye on it. I think that we got some warning signs for sure when you look at the CDS spreads of banks way back when as we approached 2008. So these are the things that you need to be watching for. Again, I'll continue watching them for you, but do keep an eye on it, and do go to trishintel.com. Do sign up for my newsletter. I hope to see you there. It's really important that we have this connectivity and that we are able to talk directly. So go sign up for the newsletter and the podcast, of course, which will be downloaded to you every single day. Thanks again for listening, everyone. I'll see you Monday.